Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-magdi.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. The title of this video is High Frequency Trading Using the RSI Indicator, the Relative Strength Index Indicator. All right? When we are talking about high-frequency trading, we are talking about a fast trade, quick trade, small profits, all right, on a lower time frame. So we want to trade on a 10-second time frame, on a 1-minute time frame, on a 2-minute time frame, on a 3-minute time frame, maximum 10-minute time frame, taking a small profit gradually. As I explained to traders before, there are two types of high-frequency trading. The fundamental high-frequency trading that is focusing on the economy news, and also the technical high-frequency trading. This video is about technical high-frequency trading using the relative strength index indicator on a 2-minute chart. My setting for the relative strength index indicator is set at 15, so I'm using the RSI period 15 on a 2-minute chart. The rules are very simple. The overbought zone for the RSI indicator for this high frequency trading on the lower time frame is the overbought zone is at 80, 80. That's the red horizontal line here, and the oversold zone is at 20. That's the green line here. All right, we're going to look at 4 financial instruments: the dollar yen, the Dow Jones Index, the Apple stock, and the AMAT stock, applied material. Okay, so here we are. We are looking now at Apple stock, on a 2-minute chart, and I have here my RSI period 15 on a 2-minute chart. As you can see, I want you to look at this. We can program this. We can develop an algorithm with these rules. When the RSI period 15 reaches the overbought zone, which is 80, reaches the level of 80 on a 2-minute chart, that's equal to sell. When the RSI 15 is below 20 on the 2-minute chart, that's equal to buy signal. So the computers can sell here, buy here, sell here, buy here, sell here, all right, and buy here, all right? Now, before a high-frequency trading firm will use, these trading rule, they will, test it first. They will use different financial instruments. What I say to traders, the high-frequency traders are trading financial instruments that are moving very fast. So do not try to apply, a high-frequency trading strategy with a financial instrument that is, lagging. All right, this is very important. All right. So Apple stock, we know that it moves very fast. So this is suitable for high-frequency trading. All right. And our rules are very simple, as I told you already. So as you can see here, we have some successful trade here. This is a sell signal here. We will sell, as you can see, the price went down. As the price going down, we can set another rules. Price going down after a sell signal. If the price reaches the first and nearest support level, we will take the first profit. If the price dips below the first and nearest support level, we will continue to hold the rest of the trade until the price reaches the second nearest support level. All right? Now, there are different rules that we can use when we are, setting our algorithm or our trading rules for computers to use, all right? There we can test them a different time of the day. So it's not only the financial, we will test them on different financial instruments and see the financial instruments that are responding positively to our algorithm, all right? We will also test it during, at a different time of the day. We may test it during the first hour of the trading day or the second hour of the trading day, or we may test it during the last hour of the trading day or the trading section. All right, so we may set different rules depending on our risk tolerance or what we are trying to achieve. Okay, because as a high frequency trading firm, you want to take small profit consistently on the lower time frame. All right, so you don't want to remain in the market too long. You remain in the trade for a few minutes, all right, or even a few seconds, all right, and take a small profit. This is very important. Small profit consistently, all right? So here you see this was a successful trade. The price went down, okay? So Apple stock, as the RSI 15 on the 2-minute chart reaches the level of 80, the price, went down. So and now the RSI reaches the oversold zone below the 20. That's a buy signal here. So if we do not test our rules, you can see that this trade here, this buy signal, the price start going up a little bit, only to come back down, all right? So we may set different rules and say that when we are entering the trade, 2 pips below the entry point, that's our warning line. So if the price dip below our warning line, computer should close all trade. That can be also another, trading rules. Okay, so this was not a very good trade for us. As you can see, the RSI went back down near the oversold zone. We may attempt, though it did not reach the oversold zone, we may attempt to buy again here, and this time, it was successful. So we may create, different trading rule or different algorithm that we will submit to our computers or ask the computer engineer to create for us a trading robot that will implement these trading rules based on the relative strength index period 15 on the 2-minute charts. All right. So now the RSI, the period 15, is now overbought again. This is a sell signal here. As you can see, this was a successful trade for us. Though the price went up a little bit before going down, it was successful. As the price rolling it down, we will take the first profit as the price reaches the first and nearest support level. After a sell signal, as soon as the price reaches the first and nearest support level, we may decide to close our trade or close a part of the trade, depending on our risk tolerance. All right, this is about high frequency trading using the RSI indicator on a 2-minute chart. Here again, you can see that the RSI period 15 reaches below, the oversold zone. This is a buy signal for us. As you can see, we will buy, and this was a successful trade. We may decide to take the first profit as soon as the price reaches the first and nearest resistance level, right here. We'll take the first profit. And we may close, we may decide to close our trade or close partially the trade, all right, and let the rest run, or we may decide to close our trade altogether, all right. So this was also a successful trade, a buy signal here. Here again, the RSI period 15 was above the level of 80, it went above the level of 80 in the overbought zone. That's a sell signal here. We will sell. All right, as you can see, this is a trading robot. So though these are computers taking the trade, we can modify the rules so that we may have a successful trade. All right, you understand? Okay, you understand? So if you set your rules just overbought, oversold, buy and sell, and if you don't have profitable trade or it's not a viable trading strategy, you may add additional rules to your trading rules that will allow you to trade successfully. All right. Now again, the RSI period 15 reaches overbought zone. Yet again, this is a sell signal. We will sell, as you can see, we sell. The price rolling it down. All we want is small pip, 2 pips, 3 pips, 5 pips. That's it. Price reaches the first and nearest support level. We will take our 4 profits, or close our trade, or close partially the trade. Yeah, you can see after that, the price gap up very fast, to this level here, because the RSI period 15 has displayed a double bottom pattern. All right, there are other rules that high-frequency traders are using, which is based on the price itself and the chart pattern. One of the chart patterns that the high-frequency traders are using is the round bottom the round bottom, or the inverted head and shoulder pattern. All right, you will see that all the time, and the computer will quickly. This is one of them here. All right, the round bottom surprise. You see, it went down a little bit and went up, and then come back, pull back a bit, boom. This is what you will see very often. The price will run very fast. Now you can see this is today. The market did open here, and the Apple stock gap up. All right. There's something else I need to say to traders. Very often, when a market is closed, all right, sometimes, you know, when New York is closed or a market is closed, and the computers receive a signal to buy before, just when the market is about to close. So suppose we are here. Okay, 1 minute before New York is about to close, and the computers receive a buy signal, they will buy. Very often, the next day, you will see that the stock may gap up. If various trading, various high-frequency trading firm, okay, are buying at the same time, suppose 1 minute before the closing time, the next day, there's a high chance that the stock may gap up. This is just, a high-frequency trading activity 1 minute before the market closes. All right? Again, here we can see that the RSI period 15 is overbought. This is a sell signal here for us. We will look for opportunity to sell. By the way, the TSCW34 is not about high-frequency trading. It's not about scalping. All right? Though one can use the TSCW34 for scalping, it's for day trading, proper day trading. All right? All right? Here we are. So this strategy, okay, it's not too bad, but it's just, trading indicator, in fact, what we are doing here, we are just trading indicator. So far, I did not say anything about the price, but this is how sometimes there are some trading robots that are designed like this in the market, okay, to trade like this, okay, to take small profit consistently. My approach is different because every trading system should incorporate the price. And here, the method that we are using is just focusing on the indicator alone. I do not recommend this type of trading strategy. But as you can see, it's working here because high-frequency traders are using this RSI 15 on a 2-minute chart. All right. I want to show you now another financial instrument. This time we'll look at the Dow Jones Index. Okay, Dow Jones Index, DJI. And we're going to stay on a 2-minute chart using the same RSI. You can see here is the RSI 15 for the Dow Jones Index on a 2-minute chart. Okay. Let's see how this strategy works on this for this financial instrument. So we can test this on various financial instruments and also during different period of the day or different period of the month. All right. Okay, here you can see that the RSI period 15 went above 80. That's a sell signal for us. This is a successful trend. You see that the price tried to go down, but tried to go up a bit, only to roll it down, and it continued to go down. So when we sell like this, we will take our first profit as soon as the price reaches the first and nearest support level. If the price dip below the first and nearest support level and continue to go down, we can sell again. But depending on the rules that we have set, or depending on our trading algorithm, all right? Okay, you see now? So these are not human beings taking this trade. These are computers taking this trade. So you can see that it's a very tedious trading method for human beings, but computer can easily take this trade. As always, when one is creating a trading algorithm or trading rules, one must test them, verify them, and be satisfied that it's a viable trading method before one is implementing the trading strategy. Here the RSI period 15 reaching oversold zone. That's a buy signal for us. As you can see, we should add, in this case you see that this was not a good trade because the price just went horizontal before coming down more. One can send different rule like 2 pips below the entry point. That will be our warning line or our stop loss. If the price goes below the warning line, one can set another rule for the computers to close all trade as soon as the price dip below the warning line. All right. Now again, the RSI period 15 on the 2-minute chart is again oversold here. For a computer program that is designed to take this trend, that's a buy signal. You can see that it was a buy signal. The price went up. As soon as the price reaches the first and nearest resistance zone, we will take the first profit. It was not a good trade, this one, okay? Here the RSI period 15 did not go above, okay, the level of 80, but was very close to it. Okay, if we decide to set a rule that if the RSI is very close, is rising up to the, okay, level 80, and it starts changing direction, we may decide to sell. That will be a different rule. But as you can see, our rule is that the RSI should go above the 80. It didn't. So we will not take this trade. The computer will not take this trade. But if we modify the rules, or if we are monitoring, okay, these computers, and we notice that the RSI is approaching 80, but start changing direction, we can manually take this trade. All right? Here it is. The RSI period 15 went to the level of 80. It touched it here, but did not go above it very much, but start going down. If we decide to take this trade, okay, this is a successful trade again. As the price going down, we will take our first profit at the first and nearest support level on our entry time frame. In this case, the 2-minute time frames. Again here, the RSI period 15, you have to understand that the high frequency traders are looking for, okay, tiny pip, 2 pip, 3 pip, 5 pip on a lower time frame very fast, okay, consistently. These high frequency trading firm can take up to 1,000 trade per day, 500 trade per day, or even more than that, because the computers are trading many financial instruments that has been tested before, okay, that has complied, the financial instrument that are profitable during the testing period. They will trade all these financial instruments in batches, okay? Here it is, the RSI period 15 is again oversold. You can see D below it a little bit here. And that's a buy signal for us, okay? It went below the level of 20, and then return back above it. That's a buy signal for us. We will take this trade, all right? The computer will take this trade. As the price going up, this is a successful trade. We'll take our first profit. As soon as the price is approached, the price reaches the first and nearest resistance level. Now, one can set different rules. It's depending on who is creating the algorithm, who is designing the algorithm. If the person understands how the market functions and the market principles and the market stable data, one can perfectly create excellent algorithm. All right? But there is always somebody monitoring the performance of these computers. If during the trading session one notices that the strategy is not working, they will shut them down. All right, or one may allocate a special time of the day when one can implement this trading strategy. All right, here we are for this Dow Jones Index on a 2-minute chart. As you can see, the RSI period 15, you see, touch it, the oversold zone. It went below it only to go up. That's a buy signal for us. Here we are. That's where we are now. Okay, so we may decide to set, okay, another rules, maybe say a warning line here. So we may decide to set another rules that the warning line for this trade, suppose, let's call it the warning line for this trade is, okay, one second please. The warning line for this trade is at, okay, 15819, 15819. If the price D below 15819, we close all trade. That will be another rules, all right? You see? So that's a buy signal here. So we'll buy. The computer will automatically buy without any consideration to market principle or anybody else. We will just buy. Because if we have tested a strategy and we notice that the strategy is working and we have allocated a budget, okay, we will not use the whole, okay, the high frequency traders do not use, okay, their whole, okay, trading account to use for high frequency trading purposes. They will design different strategy on different time frame with different indicators that they will use, okay, and they will implement them, and they will monitor them. And if the strategy is not working, they will shut them down before they end up taking big losses. The third financial instrument that we're going to look at is AMAT, Applied Material, okay, American stock. Again, we are on the 2-minute chart. I have all my line drawn already to save time. You see my RSI period 15 on a 2-minute chart. This is AMAT, Epic Alpha Mike Alpha Tango, AMAT, Applied Material Incorporation. And you can see that the RSI period 15 went above the level of 80, that's overbought zone, signaling to the computers to sell. As you can see, this is a successful trade. The price roll it down. As the price rolling it down, we will take the first profit at the first and nearest support level. If the price dip below the first and nearest support level and the further resistance or continue to go down, we continue to sell until okay the RSI reaches the oversold zone. As soon as the RSI reaches the oversold zone, okay, we can modify the rule. As you can see, I'm trading like somebody who does not understand the market principle, who does not incorporate the price. You have to understand that, okay? So I'm trading like somebody who just creates a simple algorithm based on overbought and oversold zone without any consideration to the market principle or the market pattern, all right? Which is not the best way, okay, to create, okay, trading rules, all right? This is not the best way. So I'm showing you here what's going on in this market. But these kind of algorithms exist in the market, and people are using them. All right. So now the RSI period 15 is over. So that's a buy signal here. All right. So the computers will buy. Okay, they will buy right here. So you see the price going up, but quickly went down. If you want to set another roll of a warning line, that will prevent big losses. Okay. The RSI couldn't reach the overbought zone, so according to our algorithm, we don't have a sell signal unless we set another rules based on the price self, which will be price below a bearish trend line, and the price rally up to the bearish trend line, and the common centralized is broken, sell. That will be a different algorithm, but we do not use that algorithm right now. Now the RSI period 15, D below again the 20. Right here again, that's a buy signal for us. Automatically, these are automated trading rules that we are applying here. Okay, though these are computers taking this trade, you can see this is a buy signal. Again, this is a losing trade because it went up a bit only to come back down. So without the market patterns or without understanding the market principle, one can get into trouble easily if one does not have a excellent money management in place. But I can assure you that many high-frequency trading firms, have their money management in place. All right, but this is going on in this market now. All right. The RSI period 15, you see here, couldn't go above the 80, so this is not a sell signal for us. Here, you can see that it touched a bit, but couldn't go above it. If we set the rule like this, that equal to 80 equals sell, okay, RSI equal to 80 equal to sell signal, then this will be a sell signal for us. If we set our rules like this, that's a sell signal, and you see that this is a successful trade again, the price rolling down. All right? Crazy trading method. Now I forget to talk about this one. Okay, here it is. The RSI was oversold right here. That's a buy signal for us because it did below the level of 20. The RSI period 15 on a 2-minute chart. Repeat, 2-minute chart. That's a buy signal for us. Price went up. Price is approaching. The price reaches the first and nearest resistance level. We'll take the first profit. If it continues to go up, we may let the rest of the trade run, depending on the rules or the algorithm that we are using. All right? You see that it's a bit tedious for human beings to trade like this. Here the RSI period 15 was very close to the level 20, didn't dip below it. If we modify the rule or if we decide to take this trade manually instead of allowing the computer to take it, so one may decide to take this trade, all right? Suppose you take this trade manually, so you will enter the trade right here. You see that the price went a bit horizontal before going up. As soon as the price reaches the first and near resistance level, one will take the first profit straight away. Now the price is now at a resistance level here. Okay? The next financial instrument that we're going to look at, let me check the time first as I'm recording this video now. live. Okay, we have spent now 24 minutes. Okay, I'll try to wrap it. Okay, below 30 minutes. Okay, so 5 minutes more. Okay, let's move on, traders. The next financial instrument that we're going to look at is the dollar yen currency pair, the currency pair that I like to call the crazy currency pair. All right, it's the fight between the dollar and the yen. Again, here I have my RSI period, okay, 15, okay, on a 2-minute chart, and my rules are very simple. Above, okay, 80, sell, below 20, buy. These are computers taking this trade, taking automated trades, okay, following, okay, the rules or the algorithm that we have, or I move my line, okay, my policy to traders, somewhere there, okay, if you accept that, okay. So here, this was a buy signal here. We will buy, okay, and it was a successful trade. The price went up, okay. Here we will sell because the RSI period 15 went above 80. You see that it was also a successful trade. So if as the price going down, we'll take first profit at the first and nearest support level. All these are set automatically. The computer can recognize the support level and the resistance level, even the chart patterns, all right. So this was a successful sell signal. Now the RSI 15 is oversold. We will sell here. This was a losing trade. We must have excellent money management in place to implement these rules so we don't end up losing. As a high-frequency trading firm, you want to manage the trade carefully, okay? Set rules that will allow you to control the risk, all right? And these high-frequency traders are major market players pumping millions into the market every day, all right, trading, okay, high liquidity financial instrument on the lower time frame, taking many trades per day, all right. There is a downside to that because it's creating sometimes a distortion in the market. In the past, the ordinary traders were busy trading on a lower time frame, but since 2008, we have seen a group of big market players setting some algorithm because a lot of human beings have lost their job. They sack a lot of traders. Traders lost their job, and the computers are now taking the trade. Apparently, more than 70% of the trade during the New York session are taken by the computers. So you are trading or you are competing with the computers if you are scalping or you are day trading. So you want to know how, okay, the high frequency traders are trading. So you may go into their mind so you can also make excellent trading decisions. This is about okay, high frequency trading using the relative strength index indicator, the RSI. All right. Again here, the RSI period 15 is oversold. So that's a buy signal for us. Pay attention to the vertical line. So we will buy here, as you can see. It went up as the price reaches the first and near resistance level. We take our first profit. You see the price pulled back a bit and went back above it. If we set our rules that as soon as the price goes back above, okay, the first and near resistance level, and the RSI is not overbought, and the RSI is rising, we can continue to buy. That will be a different trading rules. All right. Pay attention carefully, ladies and gentlemen. Now the RSI period 15 is overbought. Normally we would prefer it to go above 80 before turning around. If we manually take this trend, okay, here, right here, you see it went down just a little bit. Okay, it was not a good trade, all right, a little bit to the support level. Okay, you may see successful trade. It's up to you. Now the RSI period 15, okay, D below the 20. That's buy signal. Okay, the price staggered a bit, but finally went up. We'll take our first profit right here as the price reaches the first and nearest support level. We are looking for 1 pip, 2 pip, 3 pip. These are computers taking this trade. You have to take into consideration also the commission that you are paying to your brokers. That's why it's so difficult for ordinary traders to implement this strategy. Because if the price does not move very far, and you are just, okay, retail trader using this strategy, you will end up losing, all right? Because is madness, all right? Unless, okay, you want to do it. It's up to you, but it's a high-risk trade, all right? And also you have, if you take many trades per day, and with the commission that you are paying, and how much profit are you making, you have to understand that the high-frequency traders have a better, okay, better commission offers, okay? Okay, here we are. The RSI period 15 is overbought. The computer will sell right here, according to the rules that we have set. Computer will sell. You can see the price went a little bit down, only to go back up. Not a very good trade. All right. Again here, the RSI period 15 is overbought. That's a sell again. This is where the problem is, because sometimes if you don't understand how the market functions and you are trading the indicator alone, that's where people get into trouble. Not very good trade. Went down a little bit. Okay. Again, the RSI period 15 is overbought again, right here. Okay, after a volatility, the price ran fast. Okay, you see, pull up. This was a good trade because the price ran away fast, and then this was a good trade. Nice trade, okay, for high frequency trading firm. Here the RSI is overbought again, reaches the overbought zone. If we manually take this trend, again, this is a good trend. See, it went down a little bit. So from the level of 10219, talking about okay, the dollar yen 10219, the price went down to the level of 10203. So that's 16 pips. Not bad for a high frequency. That's a lot of money, a lot of pips for a high frequency trading firm. Ladies and gentlemen, to summarize this video, we have used a high frequency trading rules that is based on the RSI period 15 on a 2-minute chart. When the RSI period 15 is overbought on a 2-minute chart, that's equal to sell signal. On the other hand, if the RSI period 15 dip below the level of 20 on the 2-minute chart, that's equal to a buy signal. The computer will take this trend. Depending on the rules that we set for the computers, we can manage the trade carefully and achieve a consistent winning trade. There are more to this, which we are discussing on this channel, www.youtube.com/high frequency trading 24. I hope you have learned something from this video also, and we put into use, okay, to make excellent, okay, scalping and high frequency trading decision. Until the next time, enjoy yourself and be very happy. If you like this video, like it. If you dislike it, dislike it. If you have any comment, put it below, and feel free to share this video with other traders. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders.